Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. Orbit, a space tech startup raising over 100 million in Series C funding with Marubeni Corporation as the lead investor. So let's talk about that. We've been talking about Orbit for a while now. The guys have been moving extremely fast. Let's take a step back and think about the space economy for a second. Just pulling up some number. This is one of the few markets that will reach trillion status really soon. So apparently in 2014, the space sector was worth about 270 billion. This year they plan basically to close the valuation of the sector at 546 billion, and the idea is that the sector will arrive at 1 trillion valuation by 2030. So it's massive. It's a massive opportunity with massive player, and it's definitely one of the few exponential grounds that we see in the industry. What's your thinking on that, Nick?
No, I totally agree with you. So we created a fund, one of the first in Europe, on this thesis when space was still mostly a government thing. Until it wasn't, and in the last few years, you've seen the private economy starting to enter the market, and that will be the source of the next phase of growing the space market. So we absolutely long that, and the Orbit is one of the examples. Is our space fund invested in the company a few years back, and the company is still growing and raising capital. So
yeah, I mean, these guys have been pretty much working in trying to make space launches more accessible. So but not only that. So with the boom in satellite launches, because of SpaceX and other players in the industry, launches have become more affordable. People can get researcher can get up there in a cheaper way, in a faster way. But of course, there are a few problems there. One is services. So service provider that actually provide services for satellites, but also space junk in general. So space debris that are floating. So what are we going to do about that? What is really cool about the Orbit is actually that this round in particular has partially a focus on working on the space circular economy, which is essentially a very, very interesting and ambitious goal from the Orbit, which is actually working toward using scrap satellites to actually build new satellites and provide services in this way. So it's a very, very interesting way of seeing it, recycling 2.0 in the space economy.
Yeah, and this is in line with the original vision of the Orbit. So a long time ago, when the Orbit was originally funded, the basic idea was actually to start working on space debris, and they continued along these years to working on this thesis, on this vision of handling space debris, because it's already a problem. And there's a huge effort already on managing space debris. Things go around at thousands of kilometers per hour. Even if they are tiny, they can create huge damages to satellites and existing items up in space. So we believe, and they believe, that the problem will only get worse going forward. So
it can only get worse probably if there is this massive number of launches every year and increasing, and that's a big problem for sure. I think two interesting points that emerged because of the kind of mission that they are on is two things. One is the fact that of course there are challenges in doing what they're trying to do, which is essentially managing vehicles autonomously so they can actually act on space debris. So it's already a huge challenge within a huge challenge. So that's particularly challenging for them, of course. And of course, secondly, is the idea of leveraging a space cloud network. So yeah, on Earth is kind of a given. Cloud or now is pretty much like a pretty much like easy to understand. But what about space? So this is like particularly interesting. So it's a double challenge, I would say.
At least double.
At least.
At least double.
Awesome. So talking about this round, it's pretty interesting. So far, according to Crunchbase, the Orbit has about 17 investors, ranging from investor clubs in Italy up to like bigger firms. With basically the round led by Marubeni, that's make them one of the biggest, of course, of the year and for sure of the week. And it's a very interesting example on how like a big conglomerate in Japan, what they define like Sogo Shosha, which is these like massive behemoths that operate in different markets, are actually like entering like new tech through like strategic investments. And the company is massive, essentially. So in the range of like almost 10 trillion in revenue each year, operating from food to aerospace. And for them, on their perspective, is a tiny investment for sure. What is interesting is their strategy, which basically strategically they placed about 50 investments in later stage companies, and they pretty much led almost half of those rounds. So they're really committed, they're not followers, and I'm sure they're not going to stop like this kind of trend. So it's an excellent example of a very, very laser focus, like venture capital strategy from the side of a big corporation such as this company.
Yeah, I know that you love it. This is a corporate VC strategy, as you see, deployed globally and investing across the board in late-ish stage startups. So very interesting. I was looking at the same numbers on Crunchbase. So they started deploying this strategy probably in late 2019.
Yes,
since most of the investments are in the last 3 to 4 years.
Very good point.
I wonder if there is some vision fund effects here. So something like, hey, look at what those guys at SoftBank are doing. Let's provide something similar at a smaller scale, that's for sure. And maybe more focus on the corporate strategy, but
probably
it's interesting.
Probably, yeah, I agree. I think it's an excellent point. But yeah, it's pretty crowded from 2019. Yeah, before it was less, but yeah, it's definitely there and here to stay for sure. All right, moving on. Let's talk about Qomodo, Milan-based provider of payment solution to physical retailers, raised 34.5 million in pre-seed funding. Very impressive. And here we can see a few interesting points. So first of all, let's talk about the product. So essentially they're providing buy now, pay later solution. They also focus on businesses. So they kind of work on the cash flow of small to medium sized businesses. So they anticipate the cash flow and then they get basically they get paid on behalf of the company. So that's roughly the model, but it's not only that. So a model that has been working and not only in the US but also in Europe. So the so-called BNPL sort of like plays. So it's definitely here to stay. The investment is one of the biggest pre-seed. So for a pre-seed is huge, Nick. I mean, that's when they called it pre-seed, I was like, wow, okay. What was your thought on this one?
Well, since we are investors, we are pretty opinionated about this, but it is indeed a pre-seed investment because when the company closed the round, and it was not recently, the announcement was last week, but the round was actually from a while back. It was a pre-seed round by the books, so there was nothing. There was the two founders, some ideas, presentation, and some sketches on paper. The initial ideas, and the landing page. There was a landing page, but the founders managed to rally quite a big bunch of investors. us among the others, and to build this very interesting round. Since it is a pure fintech play, a real fintech play, let's say so, this 34.5 million is actually a blend of equity and a credit line, a credit facility, whereas there is a 30 million credit facility and 4.5 million in equity round. And of course, the basic idea is the credit facility will be used to sustain the buy now, pay later flywheel model going forward. So it's not a pure debt instrument. What else to say? Team is strong.
No, that's interesting. So, what my thinking is that, basically the fundraise is a substantial part of the business model, actually. So it's not, in the sense that this kind of credit line is actually sustaining operation themselves and the idea. So very, very interesting in the sense that, definitely qualifies as a pre-seed, but at the same time, strategically placed as like a big condition to actually make the model work. So it's not
you can barely test it with only some money in equity. So the best thing to do is to actually have a credit line alongside the equity, and you can really work on the metrics. So it sounds right. It sounds about right. That is a sensible approach.
The other element I think is in the intervention of Sant'Anna Capital, which we've been sparingly seeing around. Very interesting because it's a firm that is led by an Italian, which is based in London. He's basically investing both in the UK and occasionally in Italy. And it's been really active in the past years. So very, very interesting play for sure.
Well, they're very strong in the fintech sector. So they are the ones, they can consider, they are the lead investor of the round. So it's not about considering, they are the lead investor of the round because they were the firm basically setting most of the terms and providing the credit facility. And they know how it works very well. So this is, quite normal for them as a type of investment.
Nice.
So it was interesting also for us as a generalist investor seeing how this type of rounds is structured. So still always learning, as they say. And the good thing about the round is that it is very international. So the founders blended together Italian investors. The deal is mostly Italian in terms of operations. It is very Italian play at the moment. But with a strong presence also of international investors, with initial small tickets in order to see how the model works.
Interesting. So, let's mention also a very interesting trend, which is essentially serial Italian entrepreneur with foreign background coming back to Italy to have some of the most successful fundraise in the ecosystem, and we've seen it happening. And this is definitely another news that confirm a little bit this trend. So the founders, they've been working between the UK and the US for long. And the closing also was relatively quick compared to other deals. So definitely, I'm sure it's a trend. I'm sure it's a trend of people training their entrepreneurial skill abroad in a bigger market, more evolved, more sophisticated market, and then coming to Italy and really destroying everybody else that doesn't have that background in fundraising, which, it's a good thing for them. It raises the bar for everyone, which is great. Interesting trend for sure. Yeah.
Well, in the short term, that's for sure. So, since there are not so many investors in Italy, the moment that you have that type of founders coming back with strong ideas, the bar is raised and getting to funding. So getting in the deal flow is even more difficult for the others. But it is good. I think it is good competition because it raises the quality across the board. And this is in the short term. In the medium to long term, people with this type of background coming back to Italy, bringing back their experiences, I think it's absolutely necessary in order for the startup environment to grow, because bringing back international aspirations, international line of thoughts that we really need in the ecosystem. So we have very strong entrepreneurs, But I think we need more international air to breathe, let's say so, because they bring back the relationships, their connections. They put Italy on the roadmap, on the map in general. So it's quite important, also in the medium to long term.
Is there a dark side to that? So coming back to Italy and then, raising money, being really successful, launching businesses, but then again, like, are they going to hit the problems that we always see when it comes to later fundraise? So the famous glass ceiling of, Series B to C, because if these guys are on a rocket ship, Italy might not actually yet the best place for them. So if we want to keep it positive, my thinking is that, okay, with expertise and business, wisdom, they're going to also bring their network of international investors. So it's positive overall, I would say. But, the friction is real, I would say.
That's a huge risk, of course, that everybody is playing on this music, on this tune, in a sense. I can't think of any other ways, though, to attract Series B and Series C investors to Italy. Unless you move an extremely strong Series A company to Italy, and then at the moment they're raising the Series B, and you have the Series B in Italy. But that doesn't scale, I think. So we need to dance on this tune and invest in the best founders around that come back to Italy. I wouldn't say hope for the best, but I mean, have them create successful companies. Investors will come. So entrepreneurs come first.
I agree.
Pretty sure
I agree completely. And I think that's probably the key at the end of the day. Like later stage investment firm, they need like more evolved companies on Italian ground, and that's how exactly like foreign investor will start coming here.
Yeah,
and,
set up in a way they understand. I'm
exactly.
not saying this is the best way, the correct way, but set up in a way they understand that's it's comparable to what they've seen abroad. I'm not sure it's the best way, but it's a way, and a way that can help attract capital to
Interesting. So for the government that is listening, bring back people, give them huge incentive, make sure that they manage to to raise a lot of money and do great companies in Italy. That's
you are going head first to recent regulations.
I'm going there.
Head first.
Yeah, I mean, the debate is always like, oh, let's give incentive to investment firm to actually come to Italy. But hey, if the the ecosystem is poor and the talent is not there, there's no reason for them to. So I agree with you, Nick. I think it's massive. It's a massive point. It's actually investors follow the entrepreneurs. So that's absolutely true. Yeah. Awesome. Let's talk about ShippyPro, shipping platform for e-commerce, raising 15 million in a Series B round from Five Elms Capital. Very interesting product. So they're trying to build, and they actually developing an all-in-one shipping management software for global e-commerce merchants and omni-channel brands. So trying to really simplify a lot of the processing when it comes to e-commerce. E-commerce has been a little bit clunky. In the past years, they've been simplifying a lot of operations. These guys are basically taking it to the next level and even making it more simple, from printing of labels up to tracking of packages and everything. So very interesting play. Five Elms is a Kansas City firm, so very, very interesting firm. They define themselves as anti-valley approach. So they kind of despise the unicorn or bust sort of mentality, which is very interesting. So they want to take it gradually, and they've been very active actually as a company. Five Elms Capital is about they have five funds under management with 76 active investments so far. So very interesting company, mostly US based, I would say. Checking the portfolio, but interestingly opportunistic when it comes to Italy and Europe. So awesome job.
Yeah, and actually they are doubling down on ShippyPro because they led the Series A round in 2021. So it is interesting to see them spearheading also the Series B. playing by the book, 2 years between the two rounds, 5 Series A, 15 Series B. It's like a manual type of development, startup development. So very nice. Again, we need this type of rounds, at least for the international visibility, for having international investors that understand Italy as a market and as a geography. So very happy, very good.
Interesting. Talking about new investor trying to play in Italy, Yellow, new VC firm from Global Founders and Atomico investor, betting in Southern Europe. So they're trying to basically build a fund investing 200K to 500K tickets in Southern Europe. So that's pretty interesting.
Yeah, it's a follower, as they say, it's a follower strategy, betting as early as possible in the most interesting teams. I mean, who doesn't? But going to unusual geographies for a pan-European fund. Spain, Italy, Portugal. That's very, very interesting. I mean, it helps that 2 of the GPs are from Spain, I believe, because they're the founders of Global. Yeah. But I'm really happy to see that Italy is on their map, and I'm really looking forward to see them operating in our country.
Awesome. Right, Nick, any other elements that caught your attention last week in particular?
It was a good week in terms of rounds. We also had some interesting type of startups like Dreamfarm, the vegan mozzarella startup, raising 5 million from angel investors, business angels from Italy, from the food industry. So people who know what they're doing. And from what I read, they have very strong metrics. So very, very nice and very interesting type of deal. And then I believe it was interesting to see a few Italian investors investing abroad, actually in Italian entrepreneurs working from abroad. In Tropical Labs, for example, from Singapore, a quantum computing company. So that's absolutely interesting. Raised funding from Lifty, our friends going after deep tech startups.
That's another, nudge to you to actually make another metric, which is Italian founder abroad raising capital. So there is space for another graph for the newsletter.
Oh wow! I take it. That could tell a story that I don't know whether I want to hear. I mean, I would love to see it, but I'm really afraid of what I would see. Like, it's like the wrong type of signal. Like, if I'm an Italian founder, it's better if I go abroad. I don't want to find that signal.
Not too functional.
Come back. No, that would be great. But I mean, I will do that research. I got part of it already then. But yes, we have a trend. So there's a trend. So at least 2 this week are Italian founders living abroad, working abroad, and raising capital, also from Italian investors. So
yeah,
the connection to the nation are there.